Hello ladies and gentlemen, this is Ntokozo, the CEO and the founder of the Forex Academy. So before we can start our lesson, let us look at our mission as an organization. Our mission is to create a network of profitable traders. We also want to ban poverty and unleash the financial freedom. We want to provide effective and genuine information since we know we've got misleading information out there, and then we want to tell the truth and gain trust from our students. We also want to keep and maintain our service. We also strive for the best and to outperform our competitors, and everywhere we go we want to leave a mark. So before we can start our module for today, let us look at the disclaimer. We need to be aware that trading forex is a very high risk business, and you must make sure that you do not trade with the money you cannot afford to lose. As Forex Academy, we cannot trade for you because we are not a broker, but we can teach you and equip you with the strategies and skills for you to be a successful trader. So we offer you our 4 days course, which covers the fundamental part, which is your news, and then the technical analysis, which is your features, how you use your overall platform at your advantages, and how are you able to analyze patterns and using indicators and so on. And then we covered again risk management analysis, which is based on how are you able to make the trades depending on your initial deposits, how are you managing your leverage and your lot sizes. And then again the last one is the psychological analysis, which deals with your mental states. If are you able to take trades based on logic or based on emotions such as fear and greediness. So after our course, we guaranteed you that you're going to become a successful trader. So people, before we can start our module for today, I just want us to know that I made this video for you to see that the strategies that I was teaching you, they are really working as long as you perfecting them. Remember, I gave you different strategies because we've got different market conditions out there. So it is very, very crucial for you to understand all of the strategies and be able to apply them on different market conditions. Because what I've noticed about the market is that it is very dynamic and complex, and it is always changing each and every day. So the strategies that you use maybe last week may not be applicable in the following week because of the market conditions. So you need to always fit yourself or adjust yourself and to understand the markets and the pressure of the markets. So let us go now to the trades that I've taken, people. Remember, these trades I took them because I just needed you to see that the strategies are working. That's why, as you can see, that I wasn't betting the lots, I wasn't betting high lots, I wasn't betting the huge volumes. I was just using the 0.05 cents. I just used 0.05 cents. Remember, I also told you it is important to use the 1% or 0.5% of your minimum deposits. But in this case, for me, I just use these small sizes just to make this video to prove that these strategies, they do work. So people, here I was trading the euro against the Swiss francs in an hourly chart. As you can see, it is a real account here. It is written real account. So people, here the strategies I was using the price action, and also I was using the channels, and also I was using the patterns, and also I was adding the stochastic indicator in my analysis. Remember, people, as I told you before, it is very important for you to not let the indicator to tell you when to buy and when to sell, but the crucial part is to add the indicator confirming on your analysis that you already have. So as you can see here, we had our euro and a Swiss francs in a 1 hourly chart. So people, it is very important to look at the previous days, maybe previous 2 or 3 days before you trade. So as you can see, I've seen that from the 1st of February, the market was kind of like trending up, and then from there on the 5th of February, or on the 2nd of February, it was kind of like in a consolidation. It was consolidating because it was moving in a range, in fact. And then on the 5th, later around 1 p.m., the market starts ranging up, and then midnight it fell down, and then it was really below. And then after that, people, on the 5th, before the Asia session, before it started here, the market was ranging or was going into the channels. So that's why I use this channel, because I could see that, okay, the stochastic was below 30, which means it was in an oversold position. So I was expecting the graph to move up, but I couldn't rely on a stochastic. I also had to use my channels. As you can see here, we had a large engulfing bullish candle here. This large engulfing candle gave me a clue that the market really wants to go up. Remember, people, every time when the market's starting to change the course, it will reverse and then retest the area and then go back down again to take the stop losses and then again move up into your favor. That is the market maker's tricks. So as you can see here, we had a really long, nice candle. As I told you before, people, if you see the long engulfing candles, this is where the money was. This is where the financial institutions, the bank, were entering. Meaning they were buying here. As you can see here, at the previous, they were selling. So remember, people, if the market was ranging down, for instance, in the huge candles, like these huge bearish candles, the market will always correct itself. Every time when the market has dramatically ranged down or up, it will always correct itself. So for me, I couldn't enter here because I was waiting for the retest or for the breakout of this channel. So as you can see, people, the price went up, it retested here, it went down again here, and then it went up again. Once it touches this area, that is where I place my entries. As you can see, this green dotted line, this is where I placed my entry, but on a euro and a Swiss francs. There is my euro and a Swiss francs. I only used 0.05 cent lot sizes. As you can see, my take profits was 1.17190. So as you can see, people, the markets went here again to retest this channel, and then it breaks through. Once it breaks through, to me it was like the triangular uptrend flag, because you can see it went up here, it was resisting here. As you can see, this white line here, this white triangular here, it breaks also the triangular, which gave me the confirmation that the market was moving in an upwards direction. As you can see, I was in a profit. As you can see, I buy the euro against Swiss francs. As you can see, this candle put me in a profit of 0.49 US dollars 0.49 cents. As you can see, people, this is what I'm trying to tell you. The reason why you see this small amount is because of my lot sizes. If I had put maybe 5 lot sizes here, maybe my profits would be maybe $10 or $15. But as I told you, it is very important to manage your lot sizes, so that when the graph is moving against you, you won't be kicked out by the margin call. So you'll be still in a trade. So let's go back to another slide again. This was Swiss francs against the Japanese yen again, but now I was looking on a 15-minute chart. Remember, people, we will use different charts for these strategies, as I show you. Sometimes the channels that you are looking for, or the supports and resistance, or the engulfing candles, or the supply and the demand zone, maybe you won't see it on a 15-minute chart. Maybe you will see it in an hourly chart, or maybe in a daily chart, or in a weekly chart. But for me, I only use 3 time frames. I use a daily chart, I use a 15 minutes, I use an hourly in my own. But you can also use other time frames. So in the 15 minutes, when I was trading Swiss francs against Japanese yen, I've seen again the opportunities. As you can see, the price were moving in a channel. It was rejected here, it moved further down, it didn't reach the bottom line, and then it went up again, and then it breaks this channel. Once it breaks the channel, it's kind of like moving a upward position, and then again it went in a downward position, creating a triangular again for me. But this triangular was the bearish triangular, because once it breaks through here, that is where I entered my sell position. As you can see, on a Swiss francs against Japanese yen in a 15-minute chart, I have entered a sell position because I was expecting the graph to move in a downward position. And then after that, as you can see, this my stochastic was kind of like above 70, which is an overbought conditions. And also these price action had already break through my candle, through my this white triangular here, confirming the breakthrough that the price are willing to go back down to retest this blue channel. So as you can see, this was a red engulfing candle, because it was engulfing this previous price. So that is where I getted my entry. So the stochastic was confirming to me, and also the candles were confirming to me, and also the breakthrough of the candle of this triangular was confirming to me. So I placed a sell position. As you can see, this graph put me in a profit. I was in a profit all the way, and then I was able to make, this is a Swiss francs against Japanese yen, I was able to make a 2.05 $2.05. As you can see, people, as I tell you, if maybe I had used a 10 lot sizes here or 5 lot sizes, maybe my profits will be more than that. Maybe will be $20 or $40. But here I'm trying to show you, and to show you it is better to remain on the small lot sizes if you have a small account, because the important part is not about making a quick money, but is to understand your strategy and also perfect it, so that by the time you gain confidence, then that is where you can increase your lot sizes. So this is how I was trying to tell you, people. But remember, this strategy was working on a 15-minute chart. Let's look again on another. And then again, I looked again on a Swiss francs against the Japanese yen again, but on a hourly chart. Remember, firstly, it was same currency pair, but on a 15-minute chart, I made profits. And then I switched again on an hourly chart. After I took my profits, I was looking for another entry. And then I opened my hourly chart. As you can see, my hourly charts again, the price were moving in a channel. They moved in a channel. They break through the channel. Remember, every time, this is just the market maker trick, people. Every time the price breaks on a channel or breaks the downward trend, it will reverse to retest the level again, or to take your stop losses and then move up in your favor. So it is very crucial for you to wait. Once the breakout happened, it is very crucial for you to wait for the price to retest the level again and then to move in an upwards direction, because that is always a market maker trick. So as you can see, it break out to this level, it went down again to retest the blue level, and then from there I just note, okay, it retested, it breaks before, and then it retested now. Once it retested, my stochastic was below the day 30, which is over sold condition, so we might expect the graph to move in an upward direction. So here I was not using I wasn't using a swing trading, but I was scalping. I was wanting to take the small profits in each and every candle move. That is also a scalping strategy. So as you can see, I was using different strategy, combining any strategy that I know, using the channels, using the candle price action, using the support and resistance, using the stochastic, and also using the patterns. As you can see, I placed my order here because I saw the opportunity that this might be the end of this candle, of this bearish candle here, because it was retesting the area. It breaks through, it retests, so it had to move up because it had already taken the stop losses. So people, it is very crucial, because the stop losses are the reason why the markets or the financial institutions push or manipulate the price to move against you just to take the stop loss, because once they move in your favor, they want to already kick you out in the market. So as you can see, I placed my order here. It was this time, people see, I increased my loss sizes because I was deadly confident about my positions. Remember, as the time goes by, as the time you perfect these strategies, you will get obvious trades. The obvious trades are those trades that are clearly, that you can see, that you can put, even you can bet with everything that you have, because you can see that this is obvious, it's a giveaway. So previously, remember, I was using 0.05 lot sizes, but now I increased my sizes to be 0.20, which is 0.20. So because I was confident. So as you can see, for a while I was in a loss. There is a negative 0.68. It's fine, I was in a loss. Remember, people, sometimes the market will not move in your favor if it's not ready to move. So it is up to us to have discipline and patience, because most of the reason why traders are losing their money is because of the stop loss, and it's because they go out early in the market. So here I was in a loss, but I didn't go out early in the market because I had to stay in a market, because I have predicted that it will move in my favor. Remember, some of your losing trades, as the time goes by, they will become your winning trades. That is the fact. Just go back to your platform, look at the trades that you lost, and then as the time goes by in that position, in your entry, look what happened. Most of the 80% chances that the price returned back to your favor, but you're already out in the market. So as you can see, I was in a loss, but I hold on my position. So let us go to the next slide. What happened? So as you can see, people, the candle moved up. It put me in, and I was in a profit. So you can see Swiss francs against Japanese yen. Swiss francs against Japanese yen 1 hourly chart. As you can see, the market went up, and it put me into a 4.46 $4.46. That was a nice profit for us, people. As you can see, these strategies or the things that I was telling you are working. That's why I had to take these screenshots to show you that I'm doing what I know. As you can see, also the date is 2018 February, 2nd February on the 7th. So again, and then again, I went back to my 15-minute charts, people. I went back to my 15-minute charts. Still, I was trading the Swiss francs against the Japanese yen. But now I went to the 15-minute charts. I looked at the channel here. The price break through the channel, my channel here, and then it went down to retest the channel again. It retested the channel, retested again, it went down. Once it went down here, I saw these engulfing candles here. It went down, and then again I had to hold my position because I wasn't sure where the market was going. But the thing that I was confident about is that the market will soon move in an upwards direction because it has breakthrough. It has breakthrough this channel, blue channel before, and then it retested it again. So I was expecting it to move further up, because the reason why it was going down here after breaking the channel, the banks know that most of the traders, they are using a breakout strategy. Once the channel is being broken here, there are lots of people who are buying here, so the banks can push the price down to take the stop losses and then move up. That is the trick. So by the time it breaks here, I just wait, because I'm waiting for the retest. It retested here, and then I saw this engulfing candle. I was using price action strategy now, and also the channel strategy. I saw this engulfing candle. That is the trick, that the price now is ready to move in an upwards direction, and my stochastic was below the 30, which was oversold position. We might expect the graph to move in an upwards direction. As you can see, the graph went up, and then I placed an entry. I was in a negative, but I hold my position. As you can see, this candle, bearish candle, wasn't able to beat the previous engulfing candle, which shows me that I have to hold on, because the pressure is still on the bulls. As you can see, this week it shows the lower price rejection. The bulls are pushing up while the bears are saying no, we want to go down, but the bulls say no, that is how far you can go, and then they push up the prices. And then let's see what's happened. As you can see on the 15-minute charts, Swiss francs, you see how I increased my lot sizes. I used 0.80 now because I was confident. As you can see, I was now in a profit. I was in a loss before of 1.62, but now I'm in a profit. As you can see, the price went down, it retested, and then it went up on my favor. This candle put me in profit. My take profit was here around 116.840. So people, I'm trying to show you that these strategies, they are working. And then again here, I entered another position. I was looking at a euro and a British pound again in a hourly chart. So what I did in a euro and a British pound, people, the market was ranging up, as you can see, and then I saw this huge engulfing candle here, the green one, but for me it wasn't right, because before it went up and then it went down. So I think this candle was made by an economical event, or the banks were trying to take the stop loss. So that's why for me, I was very crucial to enter here, to enter a buy after this engulfing candle. So as you can see, people, you cannot only use one strategy. You also need to have other reasons why you're not entering the trade. So I wasn't entering the trade here after this engulfing candle. It was a nice trick, but the things is that the most of the things were not aligned against. As you can see, it was up, but the stochastic was above 70, which is an overbought condition. We might expect the market to move down. So that's why I did not enter here. And then again, as you can see, this was it was an uptrend before it uptrends, and then it reversed, creating now a lower low, a higher low and a lower low. So as you can see, this level here, this was a high level, this was the lower level. So that's why I couldn't enter this trade. I had to wait. So it breaks through, it went down, the market went down until it was starting to get exhausted. Once you see the wicks, lots of wicks in the candle, that shows that the market is losing its stimulation. So that is where I got my clue. And then the stochastic was below 30, which is an over sold conditions, meaning we are expecting the graph to move in an upwards direction. As you can see, people, I placed my entry here once I got this green confirmation candle, because you cannot just place your entry when you see the red candle. You have to wait for the reversal candle for the confirmation. And then I placed my entry here, and then I was using 0.10 lot sizes because I wasn't that confident, but I knew I had analyzed the market well. So I reduced also my lot sizes. As you can see, people, if I'm confident about the analysis, if it's a giveaway trade, I increase my lot sizes. If I'm not sure, I decrease my lot sizes. That is managing your risk. So let's see what happened. Remember, it was a euro and a British pound. Let's see what happened after that. As you can see, people, as you can see, it was a euro and a British pound. The price, it put me in a profit. As you can see, I was in a profit. There's a euro again with the British pound. I saw that is moving up now. I increased the lot sizes to 30. Remember, before I used 10, so I was in a loss of $2 and 22 cents because another entry was here. So the moment I realized that the market was starting to pick up, I increased my lot sizes. I placed another buy, but I used a 0.80 lots, which now it put me in a profit of 1. Still, I was in a loss. The difference was $1 and I think in 18 cents the loss. So, but as the time goes by, as you can see, again, the euro and the British pound, as you can see, the graph was still moving in an upwards direction. And now my 0.30 lot sizes I've put, it was $3 and 4 cents, which outweigh this loss. So now, as you can see, the difference here is a positive. It's a positive figure, meaning I was in profits already here, because as you can see, it was moving in an upwards direction. Then again, people, as I tell you, it is very important to understand why you enter in the market and why you exit in the market. You mustn't trade with emotions. We must trade with logic. Remember, every trader have got losing trades, but the problem is they are able to make their losing trade to a minimum, and then their winning trades to be higher than their losing trades. That is the whole overall picture of trading. It's not that I don't have losing trades. I do have losing trades, but the thing is, I am able to accept the small losses, and this was just a trick that I used. The market went against me here, but I was deadly confident that it will reverse. I didn't know when it will reverse, but I had got a clue here, and then I entered and I increased my lot sizes, which put me into the profits and outweigh the loss that I had before on a same currency pair. I'm just showing you, people, how you can trigger these things. So I hope you really enjoyed my strategies, and you can see that I've made a screenshots. I've showed you that they are working. So all in all, people, let us show you now why you have to start learning with us, why you have to learn with us to fire Forex. It's because we offer you a 4 days course, as I said. After that, we give you free stationery. After that, we give you free notes, and then we give you free USB video tutorials, which I showed you different strategy in those videos, and then I explain deeply on how are you able to make money in the forex. And then after that, we give you the 2 weeks mentorship, whereby we take you and put you into our WhatsApp group, where we make follow-ups on how are you doing with your trades. Are you making loss or are you making wins? And then after that, we discuss your losses. We look at the charts. We discuss where you went wrong, and then you make a note so that you won't repeat the same mistake again. So you don't just come and enroll with us, and then once you're done with us, we don't leave you like that, like other people, but we care for you. We do the follow-ups just to make sure that you are winning, you having winning trades. And then after that, we guarantee that you become a successful trader. And then we offered you a free certificate, the merit certificate, just for the recognition after our course. So people, this course, it's only 2.5. That is a once-off fee. It's a once-off fee. So people, anyone who wants to get hold of us must feel free to visit our Facebook page, On Fire Forex Academy, or call Mr. Mvilase, which is the operation manager, on 078-3252-318, or called me myself, Ntawozo, the CEO, on 063-4520-228, or you can email us on fireforexacademy@yahoo.com. Hope you enjoyed our video. Thank you. God bless you. Thank you very much, people. Thank you.